Hi, and welcome back to Stock Talk. My name is Joe Rabil with Rabil Stock Research. In today's lesson, I want to talk about something that I have noticed since I started working with institutional investors dating back about 30 years now. And it's really trying to understand the difference between good weakness and bad weakness, which is really where I think is a distinguishing feature between where you can get in at a really quality level after a stock has corrected versus where it's actually the start of something a little bit more meaningful to the downside. And if you can figure this out, I think you can save yourself a lot of anguish. So let's go ahead and get into the agenda. So I'm going to talk about looking to buy good weakness versus trying to avoid bad weakness. And that's really what this little lesson is going to be about. And you have to understand your time frame. So I'm going to use a monthly chart in association with the weekly, but you could do this in any two time frames that you want. If you want to buy weakness on an hourly chart into a uptrend on a daily, you can do it that way. So feel free to look at it however you want, but I'm just going to keep it really simple and look at some longer term trends I think that are pretty important in the market right now. So we just want to make sure that you understand if you're going to trade bad weakness, I mean, if you're going to play bad weakness, you have to be more of a trader versus if you're doing a good weakness trade, you can really play. I think that's the one you really want to focus your efforts on because I think that's where you can make really good money. And then after we do that, we're going to go through the individual stocks that came through. So let's just look at this one chart that's actually out of my book. And I think what I'm trying to give you a picture here is, and I want you to think about this as a moving average because the tradable trend in any time frame is going to be the 18 on the higher time frame. So just to give you an idea, if I'm trading off a daily chart, the tradable trend is really the weekly 18 MA. That's how I do it. That's how I see it. Because if I'm going to trade in and out off of a daily chart, which is my trigger time frame, I want to go one time frame up and make sure that I'm in an uptrend on the next time frame. And if I'm not, and I'm going to play counter trend, I need to know where resistance is going to come in. So this blue line kind of represents that 18 MA on the higher time frame. So I like buying weakness. I'm a big fan of buying a correction in a stock. And again, this could take place on an hourly chart, and this could be a daily 18 and 40 coming up, or it could be a daily into a weekly support. What I'm going to show you today is a weekly correction into monthly support. Okay, because the moving average is essentially defining where trend support is. So that's what we're trying to do. We're trying to find this. And what I have done for years in consulting with institutions is to try and help them avoid this. And what I see a lot of times is a stock will start to show up in the fundamental models and where fundamentally starting to look attractive after it has broken through some key levels from a technical standpoint and the trend is actually turning south. And it doesn't mean that they're wrong, but in a lot of cases it means they're early. And we can save a lot of anguish if we avoid this trap where we're buying a stock that's starting to look more attractive maybe from a fundamental standpoint because it's dropping down. But the problem is that the momentum has shifted downward and we've broken key support, and we're looking at a situation where it might take 3 or 6 months to get back on track. And as I've always said, I'm looking for, I think the best long-term institutional investors that I've worked for have used a match. They look for fundamentals and technicals working together. So I want to talk about the difference between this, and I am going to show you a couple of examples. So let's start. I'm going to start with avoiding bad weakness. And Lam Research represents to me a stock that if I'm going to play this pattern right here, I mean, we just broke this green line. It represents the 18-month moving average. You can see what's taking place with the weekly lines. We have an 18 and a 40 that have rolled over here. So I'm looking at this pattern. I'm looking at this key support in the 550 area that was just violated to the downside. I'm looking at MACD lines crossing back down through the 0 line to the downside and breaking it for the first time in a few years. I'm looking at red DI causing the ADX to move higher. And that's the first time that has happened in a while. This big blue peak, this ADX peak and this ADX peak are based on the buyers. So this is the first time we've gotten some strength in the trend based on the sellers. So this is somewhat concerning to me. Now, what I'm saying in the introduction here is that if I'm going to play this, I want to play it for a trade. I have to go down to really smaller time frames, daily, hourly, and maybe just trade this back up into resistance at 550 or something like that if they actually trigger. But what I would be concerned about is if this has some kind of a half-hearted rally and in the process this 18-month rolls over, then we're actually looking at a sell point in this stock, not a buy point. So the rally in this is going to be actually pretty important. We're going to need a really strong rally for this to salvage itself and salvage the trend and maybe turn it to neutral. But I want to make sure you understand that this is not the kind of weakness. I mean, this stock has dropped a lot. It's gone from almost $750 down to under $500 in a very short period of time. I know that people are looking at this and saying, wow, I could have bought this at $700 and it's dropped so much in a short period of time. Let me hop in here. But when you get this type of weakness, it usually leads to more weakness and or more consolidation before it can turn around. We're going to need either a sign of new support to develop or some sign of a climax reversal before we're going to make any money in something like this. If we go and look at a stock that I would consider to be good weakness at this point in time is Google. Google is holding this key support area at 2,500. It's still above a rising 18-month line. If you notice during the deterioration to the downside, this pullback from 3,000 to 2,500, the ADX and the blue and the red DI hasn't even crossed over the 25 level. So I would consider this to be a good type of weakness. Notice how the MACD is just right back to the 0 line. There's no real overrun at this point. So does that mean I go diving in at this stock at 2,700, 2,600, 2,500 just because it's come down to support? No, I don't like to do that. I go down to the smaller time frame and look for a sign that we're getting a shift back to the upside off of this key level. But this is a stock that I would have on my watch list to see if it can survive this market weakness that we've been having recently. If it can do that, then there's a pretty good chance we're going to see another leg to the upside because this has no real I would consider this does have some resistance overhead, but it has not rolled the trend to the downside or broken in any way, shape, or form. So we're still on a strong uptrend and we've corrected back to support. This is the type of weakness we want to be focusing our efforts on. So I want you to think about this when you're going through individual stocks. I think this can be incredibly helpful where you're trying to create a dividing line between good stocks and bad stocks, and this is how I'd go about doing that. Before we get into the individual stocks, my services can be found at rabilstockresearch.com. If you go to the individual package under the services page, I provide about 2 to 3 reports each week looking at individual stock ideas, also look at the markets and the sectors as well. Also, I do provide a special video for this service where I delve into the ideas for the week and gives more insights into that. If you're interested in trying this out, you can use the coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the stocks now. Okay, as we get into the stocks, I'm going to start with Lam Research. And go through Google as well. And I'm doing it with an hourly in the upper left for the first few, and then I'm going to switch over to my standard grid with the weekly and the RS in the upper left. But I wanted to show how I would be looking at a rally in this Lam Research, which I'm doing this Thursday morning. So it's updated now relative to where I was with the lesson. And so we can see that Lam Research has tried to start this rally phase. And as I mentioned before, I mean, I think the target for this, at least a conservative target, would be right around this 550 zone on the daily chart. And so that's up here on the hourly. Now, because there was no divergence, you see how the MACD made a new low with price all the way through recently. I'm not inclined to really want to play this one. If we had divergence in place, so let's say this was like this and we had MACD doing that, then I would kind of assume that we have a pretty good chance of breaking the 18 and I could play this a little bit more aggressively off the hourly. But I don't necessarily want to fight these declining lines when I don't have any sign of divergence yet. So anyway, that's kind of how I would look at that. Yeah, there's a potential for a rally. I probably would pass on this overall. We do have a rising 18 months, so I'm not trying to say this trend is going to get killed. What I'm saying is that if the rally is not very good, and that's what I was saying in the lesson, if the rally is not very good here, I think there's more risk to the downside, and we need to be aware of that. Let's look at Google. So the difference with Google is obviously what I mentioned in the lesson is that this has an upward bias. This is above support. This is not below resistance. It's actually above support at 2,500. And so one of the things that I think you could think about in trading this way, or at least thinking the way I do, is if you have a 1, 2, 3 develop on an hourly chart. So I'm looking at the monthly and I'm looking at where I've got support right here. I'm looking at this test here. I'm looking at this MACD 0 line on the weekly and the low ADX on the weekly, you know, with very little selling pressure. And I'm saying, okay, as long as I don't have a lot of selling strength on the daily chart, I'm really willing to play a 1, 2, 3 off the hourly and get in a little early. The thing is that I wouldn't put a stop here and play it off the hourly. What I would do is I'm trying to get in on this longer term trend. I would actually put the stop behind the 18-month line. So now I'm entering using timing off the hourly, but I'm actually playing for a big leg on the monthly chart. If it works, I get a big, huge leg and maybe even new highs and a pretty substantial move to the upside. If it doesn't work, you know, I'm in here, out here, I'm taking a small loss, using that as a backdrop. But it gives me the ability to play a long-term trend with taking hourly risk. So I just wanted to point that out. Let's look at PayPal. So I want to do some lessons inside of this review because I wanted to follow up to last week where we discussed the counter trend trades. And I want to point out a couple things that I think are pretty important. Actually, some of the requests that came through have just lended themselves to these little lessons that I wanted to do, and the requests that came through came with questions. So I'm trying to answer the questions along with giving the read on the stock. So I want to make sure I do that. So let's just look at PayPal. So PayPal has now gotten very extended away from the monthly line. You see this 18-month line? Look at how far away we are from that. Look at how far we got away from the 18-week line. Look at how stretched we're getting on a MACD basis. Look at how the ADX has gotten up to 65. I mean, that's actually pretty overbought from that standpoint. And we do have MACD on the monthly reaching the 0 line. So we've got some things that are suggesting that maybe, and then look at, more important than anything, look at this big area of price support on the monthly chart we're coming down to. So once we reach that, then I think we can go down to the smaller time frames and look for like reversals to take place. Now look at what's taking place here. We've got MACD divergence taking place. Okay, we've got a lower low in price and a higher low in MACD. So that's gonna get me thinking about this automatically. But I do want to zero in on this for a specific reason. Look at what's going on to the green DI. See how this is making a higher high? We made a peak here, another peak here. You know, I guess you could call that a peak, although that really wasn't a pivot. So I'd be looking at this green here, this peak here, and saying, wow, we're making a higher high. Now, we're definitely making a lower low. So the sellers have weakened and the buyers have strengthened for the first time in this decline. So I know I've got divergence in place, and I'm crossing the in the process of crossing the 18 MA on the daily chart. So I think I could go down to the hourly again and I could look for this pattern. Look at this as a low ADX pattern. And notice how green DI is showing real strength here. If we go back and look, we really haven't had that in quite some time. The only time green DI got above 25 was here, but it didn't get above the red. So, and then it ended up turning back down without making any kind of a pivot reversal back up. So we haven't had green make a really good move and take out red through this entire declining phase. So this is the type of thing you want to be seeing if you're going to play counter trend, right? I mean, and then you have to look at and say, what is my potential target here? With strong ADX on the weekly time frame and strong ADX on the daily time frame, I'd want to be nimble. Yeah, we could get a retracement back up. I mean, it's possible it's going to get all the way to the 18-week, but I don't think that's probably not as likely. This line's going to keep coming down. You know, maybe your target should be around the midpoint of the low and the 18. Figure that out and say, okay, I want to play for that kind of a target. If I'm going to do that, that's how I would go about doing it. Let's look at Facebook because this is another version of the same thing. We have divergence on the daily. You see this? We've got some signs that the two DI lines are coming together. The buyers are moving up and the sellers are moving down. We also have a really stretched stock. Look at how far away this is from the weekly 18, and look at how far away we are from the monthly 18. Now look at all this price support we're coming into. So we've got some things going on here that would lead me to believe that this should attempt a rally. Now because this ADX is rising, you see how this is strongly rising? It's a little bit different than what was going on with PayPal. PayPal's was starting to kind of curl over. This is still rising pretty strongly. So you want to be nimble in this. If you're going to trade this, trade it for a small move that makes sense. If you use the risk off the hourly, now that we're through the daily line, you know, you can play for a pretty decent sized move when you think about it, but you don't want to go for a big kill. I mean, don't look for this big move all the way up to 280, all the way up to the 18-week or anything like that. Play for small moves, and you can participate in these type of reversals. You just have to recognize you're fighting the bigger trend, okay? And if you're fighting the bigger trend, we have to be really nimble if we're going to play counter trend. Okay, so let's go ahead. I've switched over. I've got American Express. This is another request that came in, and this came in a little late, but I wanted to cover this because the question was, are all these trends monthly, weekly, daily in uptrends because price is above all three of these lines? Okay, if I look at the 18, I'm above on the monthly chart, I'm above a rising 18-month line. I would consider that to be in an uptrend if you're above a rising 18, right? Now, if I look at the weekly chart, yes, I am above the weekly 18, but it is flat. You see how the 18 and the 40 are just both going sideways? I would consider this a neutral trend, maybe with a slightly upward bias because price is above, but it would be considered neutral to me. Now, if I go to the daily chart, yeah, price is above the 18, but the 18 is declining and it's below the 40. So I'm not necessarily considering this to be an uptrend at this point, okay? We're probably going to need a little bit more time to get this chart to actually get in line. And I bet what's going to happen is this is going to cup around. Price might move up and then come back down and test. Now that would look a little bit more attractive to me. And I'd probably be willing to do that as long as we don't get any real hard selling in the pullback, because then we're above a flat line here, a rising line here, and we've got an 18 on the daily chart that's starting to trigger back to the upside. And the relative strength on this has been very good. So that's kind of how I would look at this. You just have to be careful. Just because a price is above an 18 doesn't mean it's in an uptrend. I like to look at the slope of the 18 in each time frame to help me define that. And I like to look at the 18 in relation to the 40. So those are all these little things that I'm looking at in addition to the MACD and the ADX. But when I'm looking at just pure trend analysis, I like to look at the 18 relative to the 40. But mostly I like to see whether the 18 is rising or falling. Okay, let's look at USO. So, I mean, one of the things that I would tell you is just looking at what's taken place. Really big move to the upside. Definitely some climax action. Look at the size of the volume. Biggest volume bars we saw, up bar and a down bar. And so I'm under the assumption here that we've built up some resistance now overhead. Now, because the momentum signs on this chart, not this chart, but on this stock are strong. Look at the rising ADX on the weekly. Look at the ADX on the daily. I mean, we're probably not going to fall apart. So if we get a climax move and we have underlying support based on the momentum, then I think we're going to form a range. That's kind of what I would be expecting. Now, does it get all the way to 80? I'm not sure about that, but I think we're going to channel a little bit. And it might get sloppy. It might take a little bit of time. We might need to see this MACD come back down to the 0 line again before this is ready to go. But it's keeping me a little less interested in buying energy stocks right now, just based on this climax move that's taking place here, because we're seeing a lot of that taking place in the individual stocks as well. Okay, so I did get another specific question on a couple of stocks I wanted to cover. So the question here was, because there was a pinch developing on the weekly, you see this pinch developing on the weekly, and he was thinking the trigger would be a break of the 40. What would my target be? Well, if I were going to take this as that kind of a trade, my target would definitely just be to these lows here. And there's specific reasons why. So we're coming into some pretty good support when you look at the monthly chart. We're sitting on the 40-month moving average, okay? We actually have pretty good momentum conditions in place, even though we overran the 18 months. So when I see that, I'm inclined to believe that we're going to find some support and get a rally. The reason why I would pass on this trade is that we had this initial signal here, especially the one right at the 18 when it was breaking below the 40. That was kind of the first signal there with the MACD. That was a pinch play. And then we got another pinch play as this rallied up towards the 18 here. So we had two pretty good signals. And now we're coming into support. So I wouldn't really be all that interested in playing this now for that particular reason. So, but if I am going to do it, I would be playing it very nimble. And I might need to go down to an hourly to have the risk reward make sense to do it near those lows. Okay, AYX. Again, the question was, does the divergence here eliminate the trade, the potential trade at the 18 as a short play? Both of these were short ideas, okay? I would say the question is, the answer is no. I mean, yeah, there's some divergence there, but based on, if you're doing it as a swing trade, that's not what bothers me. Here's what bothers me. Look at this big green bar. So this is a part of the pinch. When we get a big green bar like this, you have to assume the midpoint here is support. Now, it did overrun that, but when I see that, it's just a pass for me. I'm not going to play that to the downside when I get the big green bar as a part of that. So that's kind of how I would look at it. It's not really something that would intrigue me from that standpoint. I like to look at the individual bars to help me make those decisions. Okay, now I want to follow up on last week. I answered a question about UNH, and I had a lot of requests last week, and I was trying to get through them all. And I probably cut this one a little short because I think I came across as really negative on this, and I don't want to give the impression that I am overly negative, okay? I don't necessarily like the fact that the ADX has dropped down, but we don't have any red DI on the weekly here either, and we have a rising ADX on the monthly. The problem I've got, really, is that this is stretched away on the monthly. Okay, and it has been for a while. So I'm not inclined to want to play this off the monthly and the weekly and play this breakout and have weekly risk. But I would be willing to do it off the weekly and do the use daily, and then I can use daily risk, right? So if this breaks out, it hasn't broken out yet, Now, if we get a decent breakout, some volume confirmation, maybe green DI kind of confirming here out of this little low ADX pattern, I think I would have an interest in playing this, but use daily risk. Trade this more than play it as a long-term investment, okay? If you're willing to do that, then I'm okay with it. But I don't know that I really want to play this as a longer-term investment when you're too far away from the 18 months. So I wanted to clarify those thoughts. AVGO. So this is a stock. This is a relative strength stock. Look at the relative strength line. You see how well this is holding up? Now, so it has held up very, very well. Here's my problem. Again, we're stretched away from the 18 months. So this is not a long-term investment for me. I don't want to do this when I'm a little too far away from the 18 month, no matter how strong it has been. I would be willing to play this off the daily chart coming up through this resistance area. I want to see a little bit. It hasn't actually done it yet, but it's getting pretty close. We're sitting on this area on the 18-week, and we're sitting on this area on the daily, but I want to see a little bit more confirmation. Love to see green DI pop when we break out, and if we get that, then I'd be willing to play this probably for a target up here, maybe even a little bit more, and if we get help from the market, then this stock could go to another new high. But again, look at your time frames and make sure you understand which time frame you have to play. Okay, well, that's it for this week. Thanks for joining me. Send those stock requests to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.